Hello guys, welcome back to another lovely training video. In this one we're going to be doing some in-depth stock analysis on APYX, and the reason for that is it's today's leading gapper at least around 2 p.m. market time. Now quickly, before we do get into analysis, I just want to let you know that consistent uploads are back if you haven't noticed, but we are going to start uploading twice a day. We're going to have one at 2 p.m. market time, and that's going to be on a small cap, usually the leading gapper on the day, and then we're going to have another one at market close at 4 p.m. market time. And that's going to be on a large cap stock. Not always necessarily like a big move on the day, but maybe one that's coming to a low risk buy or low risk short, and one that's probably a lot of people may be looking at, or a stock that has earnings coming up either that day or pre-market the following day. Usually going to be the stocks that we'll look at. But anyway, to get straight into it, we'll go over to APYX and start seeing where are our targets going to be on this stock. And we can see already it's up around 50% on the day. If we go intraday, we can see, actually we'll even go out to a 5-minute chart, we can see that it's not, we're pushing up towards that high of the day again at around 568. So we'll mark that as a somewhat of resistance, but depending on how you trade, obviously you'll use highs in different ways, and that will usually be either a breakout or, if it fails at level, a short. But quite easily, all we need to do is go over to the standard deviation. So the handy things with small cap stocks is they're a lot easier to analyze because you don't really need to pay attention so much to the fundamentals, because these trades, 9 times out of 10 people trading these, you're looking for either a very quick day trade, maybe the occasional swing, but either way, you're looking just to play the hype. And usually the news doesn't justify its kind of move. And we can kind of see why is it moving today. Has FDA received received FDA approval. So yeah, that does justify a move, but usually these moves, 50, 100%, 200%, whatever happens on the day, usually over exaggerated, and they will pull back after. So you're looking just to make a move on the initial hype. So where will our targets be on this initial kind of move? So obviously we've got the resistance coming into 568. But not a resistance we would really use. Maybe use it as a breakout if that's your strategy. But either way, we do have a half deviation coming into around $6. And the reason this one's a key one to be looking at is on these kind of penny stocks or just low value stocks, if they're below kind of $10, these whole dollar resistance are psychological levels and will tend to be a strong resistance. So $6 coming into that, we would expect to see some sort of resistance coming in here, and it also does line up with a half deviation. Usually we won't trade off half deviations, but when it's matched with a psychological level such as a 50-cent or a whole dollar, then we'll tend to take some notice on them, at least on these small cap stocks. If the half deviations on a 25 cents or 75 cents, unless the stock's under $3, we will kind of ignore that because they just don't have as much strength as a half dollar and the whole dollar. Now, where will our next level be if prices do continue up? We're going to have the next one at 650. Again, a psychological level and lines up with a half deviation, so it's definitely a level that we'd be looking at. If prices do continue even higher, then we're going to have that 750. Now, this is statistical mean on the daily, so here we would expect some sort of heavy resistance as we come into here, and again it lines up with a psychological resistance, which will most likely make the level stronger. And again, whether you do this to short the stock or you use this to get long, it usually gives it more power. For example, if you're shorter and it falls as soon as you come into that level, your short is probably going to have more probability to work. If you're looking for the breakout, then if it can break over that level, the 755, you're breaking not only over the statistical deviation, but you're also breaking over the psychological resistance. They tend to have added strength even on the breakout. And again, if we continue up, where we're looking at 845. Now, this obviously from where we are now, that would require the stock to go up another 50%. So how likely is that? Maybe not all that likely. But if it does, these are kind of going to be the key levels we're looking at. Obviously, you can look at the deviations higher up if prices do continue to go, but we're not going to pay as much attention to them because it's more unlikely for the stock to kind of go up to this level. But we will mark them out just so you know where these levels are, and if prices do continue to soar, these are the levels of resistance that we'll be paying attention to. But obviously these levels do go all the way up to $20, which is unlikely for a stock at $5, even for the kind of small gappers that do move quite big moves. Now on the downside, if the stock starts to fall, where should you be looking to get out? Or maybe if you're looking to buy in some size, Then you've got the statistical mean on the 4 hour at 463. We can see as well, it didn't really have too much resistance coming into it pre-market. You had the initial jog came into this level, kind of retested it here again. We did see a bit of a sell-off within these 5 minutes. I imagine if we go to a 1 minute chart, we'll see that a bit more clearly. Yeah, you can see come into the level, sell off, but it probably pulled back. I imagine this isn't at the 9 or 20 EMA, and then continued up. But yeah, either way, this will kind of be a support on the way down as well, because it is the statistical mean. Then going over to around $4.30, you have the first deviation on the daily. So again, this will be a support that we're looking at. But overall, these are going to be the 2 levels on the downside that we're looking at, because we don't have any deviations apart from the gap fill around 370. And if it comes back down to that level, I imagine it's not really going to be on anyone's watch list from that level. So overall, that is kind of the breakdown on APYX. Hope you enjoyed the video. Hope you see you next one, and that's it. Peace. Maybe I'm crazy.